Hey everyone, it's a brand new trading week, a 5-session set, a lot of news this week. And so I wanted to show you guys a strategy today that I've mentioned before in the videos, but I want to go through and show you a trade, actually two trades that one of my clients just did last week. So you can see that it's not just me doing this, my clients are doing this as well. And this is a strategy that's going to work very well in a week like this week, where we have a lot of news, a lot of potential for sort of overnight gap risk, as we call it, where we might get overnight news and then the market in the morning either gaps higher or lower depending on the news. And it's called the gap trade. So let me just get right into it and show you guys what this kind of looks like. And specifically, what I'm going to show you here is a trade. I took a screenshot of what one of my clients, this guy's name is Sebastian, he sent me this. He said, I just closed the gap trade in a ticker called OKTA today. Great cash flow, $450 in only an hour, actually in 25 minutes. And he said that he was losing a little confidence, and now he's gaining it back. And in fact, he sent me another one last Friday. He made another $200, so very, very quickly in these kind of trades. So how does it work? Well, in essence, what happens is the market on any given day, or any given stock for that matter, it can be an index, can be a stock or an ETF, something like that. They will either gap a little bit higher or a little bit lower at the beginning of the day. So these are daily. This is day one day of price action. This is another day of price action. I cut my hand at the gym this morning. So this is one day. This is another day. And each one of these increments is 5 minutes. And you can see what happened to this stock. It actually gapped very meaningfully higher last week. I think it was Thursday morning. And then what happened is that the stock started to lose steam up here, quickly reverse, and starts to fill this gap. Let me mark this a little bit more. And so these are wonderful cash flow trades, and they are working in any market environment. They really do. They work in any market environment. But right now, they have been working exceptionally well for the past few months, and I fully expect that to continue for really probably at this point years, because we're seeing a little bit more volatility on a single stock basis as well. So very simply, what we're trying to do is when a stock gaps higher, we're trying to see if we can fade it or short it down to the mean reversion move, or if it gaps lower, we buy it. Now, of course, there's some very specific criteria to this. You can't just randomly do this. There are situations where actually a stock will continue to rally if it gaps higher, or continue to fall if it drops. But there's a way of doing this, a methodology that I am going to teach on, when is it? I think Tuesday. So let me quickly show you this. If you're interested in learning this cash flow strategy, it's going to be this Tuesday, the 12th at 7 p.m. Eastern. So that's 7 p.m. New York time, or 4 p.m. Pacific time. So make sure you register at the link down below. For that, I'm going to give you all the details of how this exactly works. And you can look at his email, or at least the snippet of Sebastian's email. I mean, this trade only took him 25 minutes. You may not be able to see that so closely, but it says 25 minutes, $450, and he simply traded this gap mean reversion move that, again, I will teach you guys in this webinar on Tuesday. So a lot of news this week. This is a perfect strategy for this kind of environment. If you want to learn it, join me on Tuesday, link down below, or if you receive this by an email, there should be a link in the email. Have a wonderful start to the week. I'll see you guys tomorrow.